PDF parsing activity in the earlier world was anywhere between 80 rupees to 150 rupees per file.
Right.
An account aggregator is able to give it for 3 rupees, 4 rupees. That effectively brings about 25 lakh MSMEs straight away into this, ecosystem to access great credit, competitive credit from, the largest of banks in India.
Given that now that SROPs comes into play and the centralized stack comes into play, how do you think the landscape will change? Welcome back to this exciting episode of Fintech Ki Baat Dil Se, and we have with us Mr. Venkatesh Krishnamoorti, who just shared his really awe-inspiring journey of entrepreneurship and building his career in the financial services space. Thank you so much for sharing that. If you guys are just tuning in and haven't seen the first part, you can check out the links somewhere here. Click on it, come back, and we'll be right here waiting for you. Thank you so much. So having said that, Mr. Venkatesh, thank you so much for doing this. It has been a really inspiring journey so far, and thank you so much for sharing it with us. We now move into the next segment, which is called Dhande Ki Baat, in which we essentially deep dive into the business that you're doing, what essentially is happening in the industry, and so on. Since you operate Safe.in in the account aggregator space, and you've already given us a brief background of what the company does, let's kind of draw the curtains back and dive a bit more deeper into what's happening in the account aggregator space. Over to you.
Sure. So, like I said in my earlier section, account aggregation is a very, very significant step in the right direction for financial services. So the way it works, I can maybe if I can take a couple of minutes to explain how it works.
Sure.
If you imagine the pre-account aggregation world, if somebody were to take a loan, say a car loan, so for example, and their account is with say XYZ bank, bank savings account, and they've approached a 123 bank for a loan. So the 123 bank will in the previous world would have asked for 6-month bank statement of that person, and the person would download it from the bank portal, print it, self-attest it for, of course, the authentication of that, and scan it and email it as a PDF to the 123 bank, which is processing the loan application. And then this 123 bank would have to extract data from the PDF document. There are OCR applications that help do that. Though there are vulnerabilities to that in terms of errors and illegible entries, etc. So it was a very inefficient process that was always happening in the credit underwriting space in the PDF world.
Mm-hmm.
So fast forward to account aggregation. What happens is 123 bank would raise a consent on the person who's applying for the loan, and that consent flows through an account aggregator, just like me or a few others that are there in my business. Mm-hmm. We present that consent to the loan applicant. The loan applicant reads the consent artifact. Basically, it contains what is being sought, what data is being sought, what is the period of data that is being sought, 6 months or 13 months or whatever, and how long will the data be with the person who's seeking the data,
mm-hmm.
and what is the purpose for which the data is being sought. Okay, these are very key elements of the consent artifact. Once the applicant has reviewed them and approved it, the account aggregator then goes to the FIP, in this case XYZ bank, where the applicant has a savings account, and present the artifact and say, look, this is the consent that has been approved by your customer who's applied for a loan with 123 bank, and that XYZ bank would extract the data from their server, core banking system, and send it to the account aggregator in an encrypted form, right? We, as an intermediary, we inform the 123 bank in this case that your requested data packet is ready for delivery.
Got it.
So this bank would come to our server and pick up the data packet and decrypt it at their end. So in the entire journey, the data packet is completely encrypted. Nobody can see it in between. It's only the FIP, which is of course owns holds the customer's data, and FIU, where the lender is processing the loan, is called the FIU because he uses the data. So they can only decrypt it. I can't decrypt it. I am data blind completely. I am just a conduit or a courier of data from point A to point B. As soon as the data is picked up by the user, financial information user or the lender, I have to purge the data from my server mandatorily as soon as the data is delivered.
Understood.
So, no point in the entire journey there is any compromise of data. It's completely secure, and at both ends, these are regulated entities, either regulated by RBI, SEBI, IRDA, or PFRDA. So, and as you can imagine, all of these entities are subject to audits and supervision by these regulators. So, it affords the highest sense of comfort and confidence for the citizen to be able to share the data, provided they review the consent and feel it is appropriate for the data to be shared.
Makes sense. Interesting. So I think in this entire journey, from what I've understood, is that account aggregating NBFC here, the AA NBFC license holder, is essentially completely data blind. And also what I'd want to understand in this case is who ensures that the data is purged from the account aggregator's server.
The account aggregator's responsibility is to purge the data, and RBI, just like any other NBFC is being audited or a bank is being audited, RBI comes and audits periodically the NBFC, the account aggregator NBFC. And in fact, we actually went through an audit recently. So in that, they look at the compliance of this condition, that the data is purged and not, retained.
Understood. Fair enough. So, just to understand what's happening in the industry from an account aggregator perspective, when it was launched, I think one of the first use cases was obviously lending. Then there were some more, expansion of use cases in terms of the net worth APIs that we saw coming out. A lot of apps using account aggregator platform to show customers their net worth and all of that. And what have been some of the more recent use cases that you have seen, something that you're really excited about from the AA space?
See, if you take financial services, lending is the most common thing that all of us, have encountered in all our lives. The other typical financial service use case that all of us again use on our daily lives is take an insurance policy, or use wealth management or investment advice, right? Or it could be doing F&O trading. You open an account with a stockbroker and do F&O trading. Wherever financial statements are being used to avail the services, in all those places, account aggregation plays a very vital role. Like you correctly said, lending is the most common use case that one can think of. Wealth management has been, I would say, the biggest consumer of account aggregation data till now, and going forward also it will be there. But lending as a use case is picking up. The lending, uses for account aggregation data has been steadily growing. It's not grown at the way wealth managers have grabbed it with both hands. Primarily because the technology in the lender's end has to be tweaked a bit to be able to consume the AA data. Like wealth managers, which are largely born digital native companies. Lenders have been there since time immemorial, and you can imagine that unless you are a born digital NBFC or a digital lending company who can quickly stitch in a account aggregation journey in between, and make it live. The large banks like public sector banks or private sector banks, they are building digital journeys to be able to consume this data in the best possible way. And there is a super mandate from all the top managements of the banks to double down on adoption of account aggregation, because not only it saves a lot of money in the credit process. Like I said, a PDF parsing activity in the earlier world was anywhere between 80 rupees to 150 rupees per file.
Right.
An account aggregator is able to give it for 3 rupees, 4 rupees.
That's huge savings right there.
Yeah, exactly. So that's just part of the story. The bigger impact that account aggregator delivers is, like I said earlier, is error-free, fraud-free data that the lender can rely on,
of course,
to make a decision about lend or not lend. We are also seeing a growing trend for insurance underwriting, life insurance particularly. So they are using it. Another big consumer of AA data has been the stockbrokers for F&O onboarding. So F&O onboarding necessarily needs appropriateness check. So that is getting done using account aggregation. They are very, very big in using that data.
Understood. So I think these covers all of the major use cases in the financial industry. Any specific use case apart from the ones that you just mentioned, which might not be a direct immediate use case right now, but is something that has good potential for one account aggregation industry to penetrate, and also for that industry itself to kind of penetrate further, leveraging account aggregator framework?
There are few areas that are still being worked out now. The first point is, today in account aggregation, only sole ownership accounts have been enabled.
Okay.
So joint accounts are yet to be live. You can imagine the amount of accounts that will come under account aggregation fold once joint accounts get enabled, because you have about, I think the estimates are about 25 lakh MSMEs in India.
Right.
Today they are unfortunately out of the ambit of account aggregation because joint accounts has not been enabled. However, there is a concerted effort between RBI, Rebit, us, and all of us to get this live very soon. Hopefully, we should be there in a month or so.
Oh wow!
The reason why joint accounts is was a little tricky, as opposed to sole ownership, is because account aggregation relies on mobile number as an identifier. So once you want to get onto the account aggregation ecosystem, we send an OTP to you to that mobile number, which is tagged to that account number, and the journey is complete, and you are on this account aggregator ecosystem. In a joint account, you have two signatories to that account. There will be two mobile numbers, so that becomes a little more tricky. In the paper world, it was easy because two signatories will be there to a check, or there is a board resolution and the bank checks the mandate as per board resolution, etc. But in a digital journey, it becomes a little tricky, or was a little tricky, because there needs to be a workflow by which the first OTP goes to one signatory and the second OTP goes to another signatory.
Of course.
Both of them give the consent, etc., etc. So Rebit has completed the technology work, basically to create the API for that. Banks are also on board. We should be seeing something soon, very soon, but in a month or so, we should be going live. That effectively brings about 25 lakh MSMEs straight away into this ecosystem to access great credit, competitive credit from the largest of banks in India. That is number one. Number two is people consider account aggregation as B2B today, B2B2C basically, because we effectively enable lending, enable consumption of financial services. But one key thing that is yet to really catch the attention of the citizens in India is account aggregation provides a one view of all their assets in their device.
Right.
They don't have to go to multiple portals to see their bank balances, bank statement. or to see their equity holding, or to see their mutual fund holding. All these are linked once at the time of setting up the account aggregation ID, and then that's it. They are sorted. They can see anytime they want their real-time balances on their device. They don't have to remember passwords of different banks and all that complications. It is securely linked. It is decrypted only in the device. So when a citizen installs a safe app, and links the accounts of theirs in that AA handle, that's it. It's a one-time effort. There is a handshake between the different banks and depositories and RTAs. Once that is done, they can, anytime they want, they can trigger a self-consent. It's called a self-consent. They trigger a self-consent, pull the data from all the different points, see it in a one view. We have an app which is both on Android and iOS. It's a very, very well-designed app. We'll encourage people to take a look at it. We already have gotten very good reviews about our app. To me, while, like I said, largely people think of B2B as the immediate use case, B2C will become center stage, more particularly because DPDP is coming in, and consent-based data sharing is key. Definitely. And the citizen will have to be made aware of their rights about their data, and the institutions will become very, very careful in the way they handle data. Today, data is like cross-pollinated between different verticals, which is not the case once DPDP becomes effective. There are stringent penalties for institutions that handle data to be, if they violate, there are very, very stringent penalties. So I think it's all converging for the good of the citizen. And there are other use cases that are today not possible because in the current shape and form of master directions of account aggregation issued by RBI, only regulated entities can consume account aggregation data.
Fair enough.
But there is a bigger set of entities that also use financial data. For example, you use an auditor to file your return, income tax return. Right? You have to give your bank statement to your auditor. Now, instead of printing a statement or emailing it to the auditor, it is a simple thing of sharing that data through account aggregation to the auditor, for the auditor to be able to quickly do your return instead of a paper-based process. The other use case that we are internally debating amongst the industry participants is when you apply for a visa for any country, you are expected to give your bank statement.
Right.
That is again there's so many. The number of people that travel abroad is just growing every year, right? So that's another use case that we believe is a very powerful use case. And similarly, there are many. And another use case is a LSP, loan service provider, right? They are not regulated in the true sense of the word, but they are overseen, licensed, etc., etc. I mean, they work with the banks and BFCs. So we are, as an industry, looking to engage with the regulator and get some, guidance and thoughts, advice from RBI about allowing these set of entities to be able to consume AA data with guardrails. Everything will have to come with guardrails that will be complied with.
Makes sense. No, I think what really excites me is the prospect of creating or driving inclusion for the MSME space that you spoke about. And this segment has largely been notoriously difficult to get included into the digital lending space, precisely because of the extensive physical paperwork and physical signing, and given the fact that a lot of these MSMEs and SMEs are in slightly remote outskirts of the cities, or even slightly in the interiors of various regions, depending on the localized handicrafts and all of that, depending on the category. It becomes really difficult for NBFCs and all of these guys to send their people there, get the onboarding done, get the collections done and all of that. So at least account aggregation, while it may not immediately solve for the collections piece, but it will at least help in getting them onboarded more quickly via the digital means. If the process that you said, as and when it goes out and it becomes live, that will be a really brilliant move. And kudos to you guys for driving that as a community. Having said that, and again, the one view piece that you spoke about, it's a brilliant use case when you talk about it from one is from the customer's perspective. He has access to all his financial information in one place, which right now is a slightly broken experience because you have to log into multiple portals. For example, an MF Central or one account aggregator, and then for your EPF you have to log into somewhere else. So all of these things, if they come under one purview, I think that makes for a lot more seamless experience. And what this also drives is customer engagement for the app that is integrating this feature, and that also becomes a really great feature to have. Having said that, if I may ask you a specific question on a personal experience that I've had on account aggregator platforms while using them. So for example, if I downloaded X app and it has a partnership with one account aggregator, right? Let's call them account aggregator A, and that account aggregator may have onboarded, let's say, 5 or 10 or 15 banks. If my account is linked with that banks, that is essentially when I'm able to get my data there. If I don't have my account linked with the banks that account aggregator is onboarded, they will say this bank is yet to be onboarded. Please wait, this is a work in progress kind of a thing. But at the same time, the bank in which I had an account is maybe onboarded by account aggregator B. But that information is not being shared with customers or account aggregator A's clients, because those are two different silos. Do you see one question, and this is as a question as an outsider to the account aggregator ecosystem as such, is do you see merit in having these information being shared between, let's say, account aggregator A, account aggregator B, account aggregator C? Because I think it would be practically not possible for one account aggregating NBFC to onboard all banks, all institutes, and it would be a very, I'm assuming it will be a divide and rule kind of a thing, wherein multiple account aggregators will onboard different segments, right? For example, one would specialize in insurance, one would specialize in mutual funds, one would specialize in banks, and then all of those information that they get can be interoperable, so that whichever account aggregator end customer ends up facing with, they get information from all the onboarded financial institutions on any account aggregator. I hope I was able to articulate the question clearly. I'm not sure.
Yeah. I think you hit the nail on the head. See, I'll lay out the landscape today.
Mm-hmm.
There are about 180 financial information providers in India today, which includes banks, deposit-taking NBFCs, life insurance companies, depositories, RTAs, CRAs for NPS, GSTN is a FIP. So there are totally 180 today live on the account aggregation ecosystem.
Right.
And there are about, I think, 16 account aggregators that are live today. The way the architecture is as it exists today necessitates each account aggregator to integrate with all the FIPs individually. So it's like, so many one-to-many, many-to-many types, right? That's the architecture, unfortunately, today. Now, if you compare that with the UPI, landscape, where there is an NPCI, which is the trusted intermediary, and anybody can start a payment app, and all they have to do is get certified by NPCI, and immediately they get connected to all the banks. Now, for as a industry, there has been constraints because of this, slightly challenging architecture, and there is serious work that's gone on already. Sahamati, which is the AA collective, has in the process of becoming an SRO. They've applied to RBI. They have designed a platform similar to NPCI, whereby account aggregators can get plugged into that proxy or a platform. It's called Sahamati Net. And all the banks, they have done the groundwork already. They have spoken to all the banks, all the NBFCs. Everybody is willing and happy to join that platform as a proxy. And once that is set up, right, then whatever you had just articulated as a problem statement today will not exist. And we expect this to take about maybe 6 months to a year to be done. Could take that long. We don't know. Because first Sahamati should become an SRO, and then RBI has to vet that technology stack that they have built. And sooner the better. But unfortunately today, that's the reality. To your point about if your account aggregator does not have all the FIPs in the ecosystem, because you may have your account with, say, SBI, somebody may have an account with HDFC Bank, or your wife may have an account with HDFC Bank, let's say. Unless the account aggregator is connected with all the FIPs, it becomes challenging for the citizen to set up yet another VUA ID or account aggregator ID just to pull that data. So the concept of one view for balances, one view for all the consents given is kind of jeopardized there, because there are 2-3 apps that the person has to handle or have. It is being resolved as we speak. Yesterday we met with the finance ministry in Delhi. We highlighted the same this challenge and the work that's been going on.
Right.
RBI is, in fact, in the recently concluded GFF, when the governor spoke, Mr. Sanjay Malhotra, when he spoke, he mentioned about coming out of the interoperability, which will solve this issue. So work is going on as we speak, and it should get resolved soon.
Makes sense. No, I think that is brilliant news. That will kind of provide a lot more seamless experience and probably also hasten the adoption across the industry.
Absolutely.
Having said that, how do you see the business dynamics evolving once this comes into play? From my limited understanding of how the current account aggregation B2B market works, is specific account aggregators are targeting either specific niche. For example, one aggregator is focusing on maybe insurance, some are focusing on a key few entities in a specific sector, and so on. Given that now that SROPs comes into play and the centralized stack comes into play, how do you think the landscape will change?
I would correct your understanding a little bit there.
Sure.
It is not the account aggregator. It's not the account aggregator who's carving a niche within these financial services. It is actually the TSPs that are doing it.
Okay.
TSPs are the intermediaries between account aggregators and the FIP FIUs. They get to decrypt the data on behalf of the FIU. They act as the external arm of the FIU.
Understood.
So some of them have carved niche for themselves in some company specializing in insurance as a use case. As an account aggregator, like we spoke right at the beginning, we are a data blind entity. To me, the data packet, whether it is for insurance or a lending or a stockbroking onboarding, it doesn't make any difference to me. I'm agnostic to the use case. I am only concerned about the data packet getting fetched in quickest time and delivered in quickest time. That's all my mandate is. The TSPs are the one who are carving niche for themselves. So that is where people are specializing.
Understood.
Account aggregators as a data blind entity, we do not have any. The fact of the matter today is the account aggregator economics or the commercial are lower than where ideally the account aggregators would like it to be. Basically because of there are 16 licensees and all of us go after the same set of FIUs today, and all of the things being the same, be it your API is given by Rabbit, You are a data blind entity. You cannot do any customization in the data. Everything being the same. The only area that account aggregators compete today is on commercials.
True.
So that is where it's a bit of hurting each other a little bit now. But at some point in time, my personal view is that there will be consolidation in this space. Clearly, it will make the commercial model much more viable in a year or two maximum.
Makes sense. Perfect. Thank you so much for answering that question and throwing light on that piece. Having said that, I think since we're about to hit a time, I think one final question, sir, for you is, how do you see this entire space evolving over the next couple of years, let's say, and any specific emerging technologies that you see? I mean, major revolution that you say right now is one of the SRO's piece. Once it comes into play and that piece comes into play, there will definitely be a transformation that will happen in this space. Over and above that, any specific technology that you see that will kind of drive another layer of transformation on top of it?
See, today account aggregation, I would say, was the first step in the data privacy regime that we will see going forward. Right? So I think account aggregators, we are called consent managers by RBI because we manage consent.
Right.
So a citizen can actually give consent, pause consent, revoke consent, delete consent, all on through the account aggregator app. So such is the power that's being handed over to the citizen, and rightly so. I think the next step, which is the larger construct, is the DPDP, right? So account aggregators handle financial information for now. There will come a time when account aggregators will also be, hopefully, if MeitY and RBI together bless that opportunity. Account aggregators will also play a role in non-financial consents. Consent is given in host of areas like your health data, your telecom data. Everywhere there is consent. I think account aggregators will have to become a larger consent management mandate, which covers financial and non-financial, drawing upon the experience as an account manager for financial data. I think it's only a logical step that we become a bigger player in this whole ecosystem. I think that's going to be very, very vital and logical extension for account aggregators to play a role there. Secondly, I would say that given today the adoption of account aggregators is voluntary, and we are seeing, like for example, I think in FY25, 7,917 crores were disbursed using account aggregation in India. About 76.9 lakh PFM customers were served in India. 47.3 lakh F&O accounts got onboarded using account aggregation. Life insurance is slightly lower, 28,472 policies were issued. So it is growing, the adoption is growing. There will come a time when every single transaction, financial transaction, will touch account aggregation, and rightly so. And it will come from the citizens' demand more. Today it is the B2B that is, driving the growth. There will come a time when the citizen will say, why should I give a PDF statement to you? Use account aggregation.
Fair. It is in the interest of citizens to do, rightly so.
They will demand that. So that is the holy grail, I would say, for account aggregation. It will come. That to my mind is the true, achieving the objective of account aggregation.
No, indeed, and I think that is rightfully so. Given the current, even most of the current lending process for PSUs, banks, and others are still driven by physical document submission. I recently had borrowed money for something, and at that time the manager had to come down to my office and take physical signatures on paper, and that took me almost a decade back, saying भाई ये तो मतलब 2010 वाली बात हो गई कि आप इधर आ रहे हो मेरे से, आप स्कैन कॉपी मांग रहे हो, अकाउंट एग्रीगेटर यूज कर लो यार, मतलब, और मैं आपको मेरा बैंक स्टेटमेंट पूरा पीडीएफ में दे रहा हूँ, यू कैन गो थ्रू इट, you can make copy and I don't know, sell it out. I don't have any control on that, right?
Absolutely.
I didn't really feel comfortable doing that, but that was the ask. So I think
change.
Definitely.
In fact, we have been engaging with the regulators and the government. If you had noticed during IPL, I think last year, and even recently also during some other sporting event, RBI कहता है campaign also extended to account aggregation. Earlier they were like, don't carry road to fee and all that. Amitabh Bachchan used to talk about it. RBI कहता है campaign for account aggregation, which socializes the concept of account aggregation. It started with mutual fund sahi hai by AMFI, and RBI कहता है for to educate citizens about scams that are there in the banking space. True. And then you also have IIDA coming out of the insurance liya sahi kiya, So I think educating the citizen about their data. I mean, even in today's world, even some of the when you see the digital arrests and all that, and some really literate people falling prey to such things, you can imagine what in store if data is freely available of not so literate people. To another point which I forgot to mention, where you talked about the hinterland. Business correspondent, as a concept in India, has done a fabulous job. They do the last mile connectivity for the banks to reach the tier 4, tier 5 people, towns and villages. So we are also, exploring how account aggregation and business correspondence can align with each other to serve that better. Lending itself has different strata, right? There is a local money lender who charges maybe 80-100% per annum. Then microfinance is like 24%. Then you have NBFCs. Then you have banks. So we, as an account aggregator, group, and of course regulator also has taken this initiative in that direction only, is to democratize credit and access competition. Why shouldn't somebody sitting in a village in Madhya Pradesh not have a loan with HDFC Bank or Axis Bank if he or she is able to digitally share data and consent?
Exactly.
There's no reason why it shouldn't happen.
True. No, I think that is a brilliant way forward. BC has always worked well for the hinterlands, as you said, and that digital medium to kind of onboard customers and to educate them while introducing new services has always worked well. And I think that could cause an explosion in adoption of account aggregation moving forward as well.
Correct.
Indeed. All right, sir. I think thank you so much. That has been a really insightful session with you. Thank you so much for joining us today on a Saturday morning and doing this.
My pleasure. Take care. Have a nice weekend.
Take care. Thank you so much.